Hi guys, welcome back to another video. In today's video, I'm looking at the Forex market, specifically currencies in this video. I've got a lot of interest in the pound. I think we've got a lot of pound strength coming in the next few weeks. Hence why I've just entered this trade here on pound USD last week. If you guys do want to join the Discord, there's a link in the description of this YouTube video, which will take you through to the server. It's a great server. Lots of interesting chats in there and setups for people to follow. The reason why I've got this bullish tilt on pound is because of the recent economic data that just come out. So in August we had GDP become high. You know, we had growth in the pound, and in the UK we had it higher than expected. We were expected to grow nothing at all, but actually got a 0.3% growth on top of that from previous as well. So we've outperformed the previous growth figure and we've outperformed the expected growth figure. Second of all, we've also, coming in to the next few days, we've got the claim and count rate. And if I go back to last month, then you can see we also had GDP grow here, and claim and count rates coming higher than expected, with CPI as well coming down. So these are all interest rate lowering data points, right? If you're looking at interest rates specifically, you know, things like GDP being higher than expected is not going to put interest rates higher when inflation's also on the downfall. You know, we've got 2.8, forecast of 2.7, and now we've actually got 2.6 here. And then we had rates stay the same. Okay, still high, don't get me wrong, 3.75%. It's higher than the 2% target, but that's why we started to see pound strength, right? If we look at pound USD here, we can see we've made a high, you know, and then we made a higher low, followed by nearly a higher high, and this is what I'm basically counting on. I believe we're going to go and break structure to make a new higher high based on the things that I've just gone through in the video. You know, in terms of the technicals here, we broke very cleanly above the 200 EMA. You can see we were holding it, broke below, but we didn't go very far below the 200 EMA. We stayed above it, and there we go. We pushed above it. We're now creating this ascending channel to the upside, which is causing me a lot of faith to believe that we're going to continue going up. My entry was based on, you know, this support here, this resistance starting to support in the market, and we also got some EMAs here on our side as well. You know, if I look at other markets, you know, we had the Japanese intervention pushing GJ down here, but then we've seen a sudden, you know, push up on GJ. I wasn't managed to take this because it was a very difficult trade to sort of enter on. You know, pound chef, look at this, very bullish as well. But my main trade is pound USD because I think we had some better than expected USD points, which actually is going to make the USD weaker, right? And even though you may be thinking, well, if they lower interest rates, shouldn't that weaken the pound? Well, the thing is if there's growth in the economy, and if we can look at interest rate expectations by looking simply at the pound bond yields are still going up despite the good economic data, which tells me there's growth coming in, not risk. Right? When we have growth with expectations higher because you have bond yields increasing as well, that tells you you're going to have room for pound bullishness as well. Right, so, you know, yes, the CPI coming out better than expected is going to push pound down like it did, like it did here. If I go to pound USD, when the CPI release came out, we had bearishness, but then we had growth come back into the system, which tells you that pound's going to strengthen despite maybe interest rates staying the same and CPI coming down. In terms of things like the US dollar, if I go to the DXY here, the basket, which is compared to the basket, you can see it's really dropped off the face of the earth because CPI has come out as expected. Interest rates haven't been increased, and in spite of this, and in evidence of this, we've also seen interest rate projections start to make sort of like, you know, I don't like to use the term head and shoulders pattern, but we can start to see slower predictions of expectations, right? Followed by, you know, we can also see this by looking at inflation expectations, right? If I look at inflation expectations, look how much they've come down from the highs here. they're on the way down, which tells me that the dollar has room to go lower. I'm not even interested if interest rates actually do increase or not. I'm interested at the moment from a swing trading perspective to see what's going to happen in the next 1 or 2 weeks rather than the next month. This is not a position trade I would want to be in because I'm unsure about what interest rates are going to, what's going to happen. So I'd rather be in the trade for the next few weeks trying to get the next higher high here, then try and hold this out to see if we can break all these highs to the left here, which I'm not completely sure about. AUD's showing some strength. If I go to AUD here, then what you can see is, if I go to the economic data here, you've had interest rates stay the same at 4.35. Again, yes, that's high, right? But what's important to note is if you look at the past economic data that's come out, we had employment looking fine, which is good when interest rates are high. Now this employment plays a much larger role in the economy when interest rates are high, because interest rates being high normally puts a strain on jobs. But if jobs are still looking good, right, and there's more jobs being pushed into the system, then that means interest rates can stay high. That's the reason why they weren't cut. Okay, and yes, CPI coming down is bearish for the Aussie dollar. But this is the main one you need to think of. This is where using your macros and having more of an advanced idea about how and what data to really look at and what can skew your analysis is really important, because some people will go and short this based on the CPI print, and realistically, if you try to short the Australian dollar, it's been increasing ever since the start of July. So you would have been on the wrong side of the market there. So again, AUD looking strong, NZD at the moment recently looking very strong. If we go again to the economic data, then let's have a look at NZD. NZD here, unemployment again, that looks good. Unemployment's still up, so that's, for me, would be like a neutral stance on employment, right? So you'd have to look at more economic data. If I go to the last month at hand, we had interest rates actually increase in New Zealand, right? That's why we've seen, since interest rates have increased, look what's happened to NZD USD. That's been quite a simple trade to play off. Okay, and then we had CPI come in higher than expected. All of these things are bullish for the New Zealand dollar, right? CPI, inflation being higher, that's going to push interest rates up after they've already been increased, right? And then we have employment. We've had unemployment increase. That makes it a neutral territory because there's also been more jobs put into the system. Again, so NZD is going to continue with the expectations left by the CPI print, right? If we saw unemployment come higher than expected and unemployment change become lower than expected, then that would be a different story. Okay, so the main one though, which has been very interesting, is CAD, right? We've seen CAD recently showing a lot of strength. They were looking to decrease their interest rates, and it was one of the only trades where I was actually looking to swing trade, and it's lucky. This is the reason why you got to be good at exiting your positions, because I went to USD CAD. I had a beautiful position here, which I managed to ride on the 4-hour time frame. And look at this. Look at the amount of pips I managed to catch. But this was all position trade, right? And then I managed to get out of the market, and that's come back down. Okay, what's interesting is come back to a very interesting level here on USD CAD, but it looks like it's broke that. It's broke this level of resistance turning to support, and it's broke the 200 EMA. Now this is important because when you're looking at a market like this, you need to start drawing fib levels out to see, okay, now we're in a territory of a possible reversal to the upside, but this is how I analyze the market personally. I need to see the confluence of fundamental analysis playing on the side. If I see fundamental analysis go like this, the CAD putting strength on the USD and weakness on the CAD, then I'll look for my trade here, right? I need to see that. I can't just enter blindly off a fib level just because it's told me that we've gone into, we've gone into discounted areas. Discounted areas is for me based on fundamentals, not technical analysis, personally, right? The reason, if we have a look into why CAD's actually really strengthened recently, is if we do go onto Forex Factory right here. But it's pretty important, right? We got unemployment looking good, right? If they're, that's normally bullish for a currency. What will be very interesting to see is on Monday what happens to CPI. Now, if CPI comes out higher than expected, we are going to see the USD CAD drop like a thumb, drop like a thumb, drop like a stone, right? And then we'll be looking for lower levels down. I mean, it's going to be very difficult to catch a trade. There'll be the only level that I'll be interested on trading off is a short term pullback into this level here. It's quite a nice level really, because you got also this daily 200 EMA here, which could act as some support on this one. But momentum is looking very strong to the downside. It's incredibly difficult to catch these short term pullbacks in the market with this. When it's just this quick, right? We had a really nice, possible short position here, which some people could have looked to taken in. Again, wasn't a trade that I was looking at personally. It's just one I probably missed. But if we go further back last month into July, we saw interest rates hold, so they didn't decrease, right? Employment still looking very positive for the CAD, and CPI interestingly coming down lower than expected. Now that's quite interesting to me, because CPI coming this low is normally quite a bearish thing, because it hasn't just come low, it's beaten expectations quite significantly to the downside. Now, if we do go to Monday, July the 20th, then this is what caused this up move to the pullback. But again, it's very difficult to short the CAD off that news, isn't it? Even if there was trading opportunities to short, to trade this short-term pullback here. But in terms of GDP, it's looking pretty strong. Again, expected to come down, but actually we've held strong. They probably expected this because interest rates had been stayed the same, so they weren't looking really too much for a big growth story. But actually, we did see that happen. So CAD's there's some really good, interesting currencies to be looking at trades. I hope you guys have enjoyed this video and found it interesting to yourself and somewhat assist with your own analysis. If it does, make sure to smash the like button and subscribe, and I'll see you in the next one. But thank you.